Today, we're going to get into why the XRPL is the ideal blockchain for the tokenization of real-world assets and why banks and institutions are going to choose it over things like Solana or XDC or Bitcoin or Ethereum. We're going to break it down and go through the amendments one by one that have been instrumental in placing it as the main blockchain that banks and institutions are going to use. And we're going to go through three different things: the core features, compliance, and why some of the tokens issued on here are ideal for tokenization of real-world assets. So first up, we're going to talk about the core features of the XRPL and why it's the ideal blockchain for the tokenization of real-world assets. First up, number one, you guys may remember this, but back in 2022, they launched NFTs on the XRPL. And this was way after the craze on Solana and Ethereum. And the main difference here is this is not a layer 2. It's built into the mainnet of the XRPL, and you're able to issue NFTs directly on chain. There are smart contract features and components that are associated with these NFTs. You can still do the royalties. You can still fractionalize them. You can trade them. You can put them up as collateral. And that's what you need. So many people believe that you can band-aid stuff or add a layer 2. But really, you're just adding more complexity to a system. In reality, banks and institutions are going to want to be able to use one network for all these things. And so that's why NFTs on the XRPL are fast, cheap, easy, and they were late to the game, obviously, after a lot of other people had minted them on their network, and we saw a big crazy run on price appreciation for NFTs. But they really do have real-world utility. You could mint deeds to a property or carbon credits, or the real estate itself, and be able to trade those and again fractionalize it and be able to have royalties on it. There's many things that you would want to have a non-fungible token for, which is what an NFT is for those that may not know, but those are native to the mainnet thanks to XLS 20, which was passed again in 2022. Later on in 2024, we finally got automated market makers. And this was early in the year. They had proposed the amendment back in like October 23, and it took a long time before all of the validators on the network came to the consensus and actually passed this deal. And there's a big difference between these AMMs and the AMMs on, again, some other networks. So Ethereum and Solana and many other smart contract networks have automated market makers. The difference here is people that represent the value inside of the liquidity pool are not taxed. The LP token increases in value, and people bid or arbitrage that market and have to bid an LP token. So they burn those when they bid for those opportunities to arbitrage those markets. And that reduces the supply of the LP tokens in the pool. And therefore, it increases the price of the LP tokens in the pool. So as these become much more adopted and used, we do have a few AMMs on the XRPL. We have one that's a good friend of mine that is actually the largest AMM, currently with $15 million in liquidity in crypto land. Shout out to you guys. But this is a game changer, and it creates a vibrant market, and it's alive and well today. And it's what is going to make the XRPL the go-to platform for liquid trading of tokenized assets in the future. And right on that's heels, we don't have this up for vote yet, but it has been proposed, is XLS 65D, and that's liquidity pools on the XRPL. And again, you can use that LP token from the AMMs, and then you would also get an LP token for representing your value in these pools. But this will pair assets, right? So you got ROUSD against XRP. You could put that in the pool. I think that these are going to be a bit different though. You'll be able to contribute your XRP to a liquidity pool, and somebody will be like a general partner that will manage that pool and allocate that appropriately to be able to generate returns for the partners or the LPs in the pool. And this is actually, I think, going to be adopted at scale for people that are running funds. This will be a really good way for people to allocate capital in kind or in stable coins or whatever other issued assets on the XRPL exist into these pools that are then managed by somebody else and promise a return. And I think these will end up being run as securities. The AMMs, it's going to be difficult. They are going to be a market, right? And it's an automated market maker. So it's a DEX that allows for interoperability between these assets and real-time settlement, and a lot of liquidity between issued assets on the XRPL. And with that, it's a big deal for institutions. It removes a lot of the slippage, and so do the liquidity pools. So for all of these reasons, faster, cheaper, less slippage, easier in and out, all those things, I think you're going to see institutional adoption of these AMMs and liquidity pools by institutions over some of the other options that are a bit clunkier on maybe Solana or Ethereum. And again, participating in these pools, your returns grow tax-free. So it's a big deal until you take the returns out. Next up, we have XLS 47D, and that was price oracles. And so none of this is possible. Like, you're not going to be able to trade real time or have real market data or pull prices from institutional trading on the stock exchange or for bonds or for commodities or for Forex or for whatever other market they're going to be trading on the XRPL for these tokenized real world assets, unless you have price oracles. So you need interoperability with Chainlink, you need interoperability with the FTSO or Flare time series oracle, maybe IOTA, maybe even DAG or Constellation.